All right, welcome to Coffee with Markus. In today's show, we will talk about what is happening in the markets today. This will only take us 2 minutes or so, and then we will talk about how to research stocks for options trading, especially the wheel. Super important. Next, I'll give you an update on my $500,000 account. I will show you my current trades and also how my positions are doing right now. And after that, I will answer your questions. So, since you're here live, put them in the chat and I'll answer as many as I can later in the show. Now, as you can see, we have a full program. So let's get started. This show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started. All right, let's get started and talk about what is happening right now in the market. So let's jump to the iPad, and here we see what is happening. Well, it's really interesting. This morning we opened higher, so here we are on a 5-minute chart of the S&P 500. But then, as you can see, pretty much the whole day we have been moving lower. Right now we are pushing a little bit higher going into the close, but right now the S&P just barely hanging on to some gains after, a tough week last week. So last week we had 5 losing trades in a row. Same here for the Dow Jones. So can they hold on, the Dow and the S&P, to these marginal gains? The Dow is actually doing much better today. As you can see, Dow also very similar, opened higher, then unlike the S&P did not slide down. It stayed pretty much for most of the morning. A quick dip around lunchtime, coming right back and hanging in here. But the Nasdaq. So Nasdaq pretty much right after the open in the first 30 minutes slid down and has been going sideways ever since, down 0.11%. So what's happening? What's going on? Well, this is where right now, let me just see. So right now markets are waiting for some impulses. Not a whole lot going on. The Fed meeting is on September 21st and 22nd. And until then, it just seems that the markets like to diddle around. Because if you look here at a daily chart, we see that, yes, we moved higher. And then for the past 2 weeks, just been going down, and last week, or going sideways, and then last week going down. So waiting for some impulses here. We shall see what is happening in the markets. All right. But now I want to talk about a very important topic. So we'll talk about trading the wheel strategy and how to research stocks. So let's talk about this. You see, when trading the wheel option strategy, you only want to trade options on stocks that you want to own, because otherwise you could be stuck in a very bad position. But how exactly do you research stocks for options trading? Which websites do you use to check for news on the underlying stock that you want to choose for trading the wheel? Should you choose Yahoo Finance or Seeking Alpha or Marketwatch, Benzinga? Well, how can you know whether you should trade the stock or not? And that's exactly what we're going to talk about in this video. All right, so I want to also give you 4 very specific examples from stocks that popped up on the wheel scanner today, so that you know exactly of what's happening. But first of all, let me show you, especially when you're trading the wheel strategy. You're pretty sure that you have heard about this. That's a trading strategy that I use to trade my own accounts, and we will talk about my positions here in just a moment. But anyhow, so I'm trading the wheel strategy, and the important thing is that you only want to trade this on stocks that you do want to own. And in fact, one of my team members did this meme. Rule number 1 of the Wheel Club: don't sell puts on stocks you don't want to own. Courtesy of Photoshop, there I am on Brad Pitt's body. Anyhow, so let's talk about this. Let's actually take a look at a few stocks that came up on the scanner today. So the first one that I want to show you is Hood. So here we go. Here we see the PowerX wheel scanner, and we see that Hood, Robinhood, came up today with various strike prices at which you could sell puts. And so, for example, a strike price of 37, and you see that actually doesn't look too bad if you look at the chart, right? So the key question is, do you want to own Robinhood? And here is what I like to do. So where do you check if there are any news that could be affecting Robinhood? So let me show you what I like to do, and we're jumping back here onto Safari. The absolute easiest way is the good old trusted Google. So here's what I like to do. All I type in is Hood stock. And after I type in Hood stock, this is where we're going to news. And now you see that, you see all of the news, different outlets. So you see Investors Business Daily, you'll see the Motley Fool, you see Yahoo Finance, the Motley Fool, CNBC, and you get an idea of what is happening here right now. And you see, for example, there's an article from CNBC. Let me just mark it up here so that you can see it. It says Robinhood tanks after the SEC chair tells Barron's that it is payment for order flow, banning payment for order flow. So that is a possibility. And you see, this is where it is super important when you're trading a stock like this. And Robinhood, the brokerage, as you know, is heavily relying on payment for order flow. So what do you think will happen when it is banned and there's no more source of revenue for this? I mean, that's obviously not good for the stock. So this is why it is important, instead of just looking at the chart, that you also check the news. And you see there's a few other news that say exactly the same thing. So Motley Fool also says, could Robinhood lose its main source of revenue? And therefore, you pretty much already know, stay away from this stock. So let me just quickly jump over here to PowerX Optimizer, see if it is still popping up on the wheel scanner. It sure is right now, it sure is. And you see, just looking at this and at the chart is not enough. You need to check some underlying news. So let me give you a few more examples of stocks that popped up today. So NVX, for example. So NVX popped up on the scanner, and as you can see, oh my gosh, there is a lot of premium here available. So why is this? What is it about NVX that gives us a lot of premium? I mean, look at these strike prices here. This is a daily chart. And if you're looking at the strike price, we're looking at strike prices of around 200. So as you can see, the drop in percent right now, this could drop 14%. And you would still collect a lot of premium. So you have to wonder, what is happening here? Why is there so much premium left? Do you really want to own the stock even at a strike price of 200? And again, we're going back to our good old trusted Google. And all we need to do here is type in NVX stock. And see, if you have been following me for a while, then you probably have heard me talking about NVX here for quite a while, because NVX is also developing a COVID vaccine. But I mean, they haven't been approved yet. And there's other vaccines that have been approved. The other vaccines did not only get emergency approval or authorization, they got full approval. And NVX here apparently late to the game. So let's take a look at this, and you will basically see, okay, Novavax will enter, investor plays things that will enter the COVID vaccine race with a bang. I'm not so sure. I mean, if you're late to the party here, right? I mean, this is why it is slipping again today, and you get the idea here. So if, see, Novavax is a steal, if you believe it will come through. But will it come through? You see, for me personally, this is too much as a gamble. And you see that other options traders are thinking the exact same thing, and this is why there is so much premium. Now, let me just give you two more examples that popped up here today as well. So the next example is support.com. Let me just see if it is still on the scanner here. It sure is. It sure is. So here is a warning sign. Whenever you see that this is lighting up like a Christmas tree here, and you see all of this is orange. What does orange mean? Orange is a warning when it pops up on the scanner. And hey, by the way, if you're absolutely new to this channel and you have no clue what the wheel trading strategy is or what this scanner is that I'm using here, I'll link to it in the description and also at the end of the video. I'll see if I even can link a card somewhere here at the top, I believe, right? So that you can click on this and get more information about this. But here you get the idea. It is a warning sign, and you see also the drop in percent. I mean, this thing could drop another 53%. I mean, here we're looking at strike prices of 9 or 8. And you see, this is where often I see that traders are getting blinded by these high premiums, and they say, oh my gosh, I can make so much money with this stock. And then they're getting blinded by the premium and they're getting stuck with the stock. So let's see, why is actually support.com providing so much premium? So, and again, this is where our good old trusted Google will help us out. And all we need to do is SPRT stock. All you need to do there, go to news. That's super important. Go to news. This is how you find out what is happening here. And then you see that, okay, there's apparently a merger happening. So what does this mean? There's a Greenwich Holdings, okay, they announce an update on merger closing. And you see, it's really interesting. This Greenwich Generation Holdings is a crypto company. So you might be wondering, why do they want to merge and what's happening there? And this is where big warning signs. You see, some mergers, they're obvious. Some mergers make a lot of sense. This here, to me, does not make sense. And you see, you don't really have to do a lot of research. So why should you actually go to very specific sites if Google pretty much tells you the whole story already? So, okay, let's do one more example. So let's actually take a look at KWEB. Let's see if this is still on the scanner. This popped up earlier here as well. So let's jump over to the handy dandy iPad and let's take a look of KWEB here. So KWEB is Crane Share Trust's China Internet. So again, let's see. A few orange here. So orange is already telling us warning sign, and this is a China Internet ETF. Now, I don't know about you. If you're watching my stock market update, then you know of what is going on in China. Well, actually, let's take a look at this. Let's go to our good old trusted Google and type in, is it a good idea to invest in China? So investing in China. Or in Chinese stocks, right? Let's see, let's do investing in China stocks and see what comes up there. Okay, so, okay, not good. Should I buy Chinese stocks? They're being regulated, right? And this is, you might have heard it. It's actually crazy of what has been going on there. Let me show you a few charts and then you get a better idea of why you should stay away from them. Let's start with an education company, and I want to get rid of my volume here that seems to be a little bit distracting. So a Chinese education company is EDU, New Oriental Education Group. And a while back, the Chinese government said, you know what, all education companies should actually become non-profit companies right here. And this stock plummeted from $7 to right now trading at $2, with basically no hope of recovery at all. So stay away from Chinese stocks. A few other ones that we can take a quick look at. So what is another Chinese stock that we can take a look at? For example, Alibaba, right? So let's go there. Baba, So today down now 2%, and this is after China basically said, you know what, we're breaking up Alipay, or we're thinking about it. And Alibaba has a 30% share, or a third stake in Baba here. So you get the idea, right? You don't want to do this. Another one, Tencent. Tencent, let's see. What is it? I thought that we also, yeah, TME. So TME also tanked after the Chinese government basically said that they will limit online games. So anyhow, where do we go with this? The idea here is, when you research stocks, which are the best websites? And for me, the best website is Google News, because Google News aggregates all of the news websites. And here's the good thing about Google News. Google ranks authority sites the highest. So this way you can be sure that you're not falling for any of the scam sites that are trying to hype up stocks. So usually, as you can see, you see something like Barron's there, the New York Times, you see CNBC. So usually very, very reputable resources. Anyhow, so that's what I wanted to cover today, of how exactly, there we go, how exactly do you research stocks for the wheel? Hope that this helps. Now next, let's take a look at my current trades and how I'm doing. But you know what, before we do this, since you're here live, let's take a quick look at your questions here. So right now, looking at this screen, because this is where I see your questions, and then we'll go to my positions here. But want to make sure, if you had any comments of websites that you like to use to check out, just let me know. Okay, so good to see everybody here. Sebastian, Jim is back. Well, where is the Wall Street sign? Well, the Wall Street sign, we actually, I didn't like it there, especially when I have this view. Then the Wall Street sign was almost behind me. As you can see, upgrading my studio right now, working with several cameras right now, and as you can see, also a super fancy background here. Anyhow, so that's where that's what we want to talk about right now. Okay, what else do we have here? Robert, our Mastermind member, so good to see you. So good to see our other Mastermind members here. Welcome. Anyhow, so Braden says Tesla, TQQQ, and TNE. What else do you need? Well, you see, I'll show you my positions right now. I think that there's some other cool stocks actually that you can trade here. So we shall see this. And I believe that Motley Fool is pretty biased here. Let me just get rid for the moment of this live sign there. That was a little bit distracting, right? I mean, JR got you covered up here. Anyhow, so good to see you. So let's see, what other questions do we have here? And yeah, Jeff says, please tell me you didn't sell puts against SPRT. Please don't do it. Just do a little bit of research, and that's all you need. Okay, you know what? Let's actually go ahead and talk about, let's hide the comment. Let's talk about my current positions that I show you exactly what I'm in right now. So in order to do this, I will head over here and share the desktop. And this is where you see my account. And right now I have 6 positions, 5 positions in my account. So let's take a look at these in detail. So the first one that you see here is CWH. So let's take a look at the chart here of CWH. So here I did sell, let me just double check what exactly I sold. And in order to do this, I need to find my mouse. So I'm looking at my computer here right now. So the 36 call, okay. So CWH, here we go. So we sold the 36 call right here. Very solid, or not call, put. So sell the 36 put. I sold 28 of these. So I sold 28 of these for 35 cents. So let's use our handy dandy calculator to see how much money this will make us. So this means that we connected $980 in premium. And as you can see, this premium I will keep regardless. It doesn't matter whether CWH goes up or it goes down or it just goes sideways. However, if it closes below 36, this is when I get assigned and I own CWH shares. But you know what? That really doesn't matter because I already owned CWH, yeah, pretty heavily this year. Let me just switch over to my account and show you the realized profits on this account right now, $152,642. And as you can see, CWH already made $11,600 this year and counting. So really liking CWH. Let's take a look at the next position here. So JWN. Okay, let's jump over to the handy dandy iPad. Take a look at JWN. So JWN, that is a stock where I sold puts at a strike price of 30 and I did get assigned. So right now I am the proud owner of 3,300 shares of JWN at $30. Now as you can see, at $30. Right now it is trading at around $27 right here. So I'm trying to sell calls at the 30 level, but right now there's not enough premium in there. So I need to wait for another pop, probably to let's say from $27 to $28, and then I can sell calls and collect premium. But also JWN has been really good to me this year. Let me just show you of what happened. So JWN, even though right now on the stock, as you can see here, so on the stock I'm down $10,000, already collected $9,099 in premium. So I mean, net I'm only down $1,000 if I would liquidate this position right now, which I'm not planning to do, because I really believe that JWN over the next few days will have this small pop that I can sell more premium and collect more money, because it's actually fun collecting premium. That's my favorite thing to do. All right, let's take a look at the positions and let's see what else is going on. UAL. So UAL is another position that I have, United Airlines. So let me show you exactly what I did here. So this is what we traded last week with our Mastermind members. And on UAL, I sold the 43 put. See, right now it's trading at 44. So we'll see where it will be on Friday. Now, the premium I collect regardless. So I sold 23 and I sold it for 36 cents. So here the premium that I will keep no matter what is 23 times $36. It's $828. So that's not bad at all, $828. And then we had what, $980. So that's already what, around $1,800 thus far that I keep no matter what these stocks are doing. Now, if UAL dips below the strike price of 43, I'll get assigned and I will own 2,300 shares of UAL. But I don't mind that at all, because this is where we go back to what we talked about. I mean, UAL, let's just go to a weekly chart here. So at the weekly chart, you see where was UAL, United Airlines, before the pandemic hit. And as you can see, since 2012, they have been marching higher from $20 to what? Around $95 up here. Then obviously during the pandemic, when nobody wanted to travel, it got hit hard, went down to $20, bounced back to 60, and is right now trading here very comfortably between a $40 and $60 range. So I don't mind picking it up here at the lower range of around $40, so $43 here. Right now at $44.83, so we are good here. Okay, so next one, LVS. That is one that I've been in for a longer period of time. Let's switch back to a daily chart. So originally, I sold LVS at a strike price of 58. So I sold puts, got assigned there, flew a rescue mission with only 1/3, and was able to lower my cost basis to 51.42. Also on LVS here, I've been able to collect quite some premium. Let me just show you So LVS not as good as JWN. See on JWN, let me switch over here to my account. So on JWN we collected $9,100 in premium. Here just shy of $6,100 in premium, so not bad at all. However, yeah, right now my cost basis being here at 51.42, it's trading at 42.86. So I need this to pop a little bit higher before I can sell more calls, or I need this to pop lower that I can fly another rescue mission. Again, this is a rescue mission that I flew with only a third of a position. And if you don't know yet what a rescue mission is and what exactly I'm doing there, I'll link to a video here in the description so that you know what these rescue missions are. Basically, the idea is that you're lowering your cost basis of the shares by selling more puts and therefore collecting more premium at a lower strike price. And when you get assigned, you're lowering your cost basis. So here, as far as I remember, it was either the 40 strike price or the 39 strike price at which I sold more puts and got assigned here. So we shall see right now, slightly down, as you can see, around $22,000 on the shares, collected $6,000 in premium. We can switch back here to the desktop. So down around $16,000, and again, that's not a big deal since it is a $250,000 cash account, and with margin, I'm looking here at $500,000 in buying power that I can use to trade the positions. But hey, no coffee with Marcus would be complete without talking about my nemesis. Lordstone Motors. Traded it out of boredom, so didn't have the discipline to really sit on my hands, and has been biting me in the ass. Oops, bleep. We need to bleep this out. I shouldn't swear on YouTube. It's biting me in the butt. You get the idea. So let me show you what happened here. So originally, this goes way back. This was in, I believe it was late February, when we had the snowstorm in Texas, and I was trapped in Florida in my RV. So I sold it at $21.50 and have to fly a few rescue missions. Can't remember at what price levels, probably somewhere around there. Was able to lower my cost basis to $15.79. Now, the good news, I think, yeah, now I'm already at a cost base of $12.86. There we go, after flying all of the rescue missions. So the cost basis is $12.86, but as you can see, it's trading at $6.48. So this is where I'll probably have this for a little bit longer. So I'm significantly down on this position. So we shall see. So the idea here is that at some point they are producing a truck, the Endurance. Hopefully that's the plan, and that they jump back up. Today they actually had a pretty good day. They had a pretty good day today. At some point, see, there was this big jump. So overall today, where the markets are just diddling around, right, opened here, went lower, but then yeehaw, went all the way up, right now trading sideways. I mean, up almost 5% here on a day where we have overall the markets not doing anything. So the Nasdaq, we talked about this, is down right now. It's pretty much flat. S&P and Dow are holding on to gains for today. So that's not bad at all. Anyhow, so today I was looking at the PowerX optimizer to see if there are any other possibilities. So, oh yeah, I'm also in these two trades here according to the PowerX optimizer. CELH working out really, really well, and OVV. So CELH, as you can see, we entered here at 76.21. On Friday, it was trading at 91. So that is what? A plus $15 move. This is supposed to say 15 here. Okay, let's try this again. A $15 move. That is not bad at all. So this has been working out well. OVV, another one that I'm in. So as you can see here, OVV, oops. That is not the right one. I hit it too quickly. There we go. That's much better. Okay, so OVV entered at $26.52 right here. As you can see, went up to $28. Wonder where it is today. $28.34. This as of Friday. Let's take a quick look where OVV is. Oh my gosh, it moved higher today. Let's switch back to a daily chart. So yay, moved a little bit higher today. So tacking on to some gains. Anyhow, I was also looking at the wheel analyzer, and as you can see, pretty much I flagged everything red. There was X that kind of looked interesting, but then it was a maybe. And when I looked at it a little bit more, and I wanted to look here at support and resistance, I didn't really like what I saw here. A strike price of 23.50. I would like it better if we can get something probably around $22, right? I mean, this here, resistance, support. We're looking at support with the wheel strategy. Okay, so therefore, I'll flag. I left this as a maybe for a very simple reason. If this keeps moving lower tomorrow, right? So then there's a possibility that we have a strike price of 22 popping up, and I really like the strike price of 22 better. I mean, we already have strike prices of 23 popping up on the PowerX scanner, so I like that a lot. Other than this, didn't see anything that excited me. So no Zoom, no Snap, no Riot, no Peloton. I mean, gosh, these guys. It's so interesting with Peloton, right? I mean, at first they had this massive run up, and then, oh, there's a problem with their treadmill. They need to be recalled. And then there was another problem. And then it bounced back. And then another problem. And then it bounced back. And another problem. I mean, it seems that with Peloton, the problems are just adding up. And this is where we go back to, do you really want to own this company, right? Anyhow, okay, let's take a look at a few more of your questions so that I can answer as many as possible here over the next few minutes. And because I appreciate you being here live. And yeah, let's see. TME, we should get out there, absolutely. Well, what about Baidu? So Jeff's asking, I've had shares, but looking to exit now since the recent government activity. Still like the company, don't trust the government. I'm with you. You see, it all started that last year they blocked where Alipay, I think it was Alipay that wanted to get live, wanted to have an IPO, right? So they blocked this, and then this year the Chinese government started cracking down. You never know who's next. I mean, they started with Didi, a rideshare app, right? Then they moved on to education companies, then technology companies, recently gaming companies. They restricted gaming to 3 hours a day. So there's just a lot. And so, Jeff, I think it might be a good idea to get out of this. Okay. Hey, you got the options trading strategy book in the mail. This is so good. And yeah, I have them right here. Need to reach over. If you don't have these books yet and you would like to know more about the strategy, right now it's only $4.95. You can get it on my website. And this is the other strategy, the PowerX strategy. See, this is the strategies that I've been showing you. So if you're interested in these books, there's probably a link in the description. You can get it as OG1 Kenobi said. There you go. Let me put these books here. Got it in mail. Yeah, was not signed by me. I cannot sign every book, so that is impossible. All right, what else? Keith says, I like Finwiz and bar chart. Well, whatever helps you. See, for me, I like to keep it easy. I like to keep it simple. And the good news is that Google doesn't have a subscription. I don't need to pay anything for doing my research here on Google. Okay, very, very cool. And yeah, Carlson says, I use Yahoo Finance. You see, I don't like Yahoo Finance, and let me show you why. So Yahoo Finance used to be really, really good, but let's just go to finance.yahoo.com, and let me just show you. So let's say that you want to research a stock. Which stock? What do we have? SPRT, right? Support. So let's say that you want to research this stock and see what is happening. So immediately what you'll notice is, okay, there's some news, and the first news that pops up here is from AccessWire. So it's not even from finance.yahoo.com, it's from AccessWire, announced an update on merger. But look at this, now you immediately have an ad, right here. Then you have another good news here, solid news. Then there's another ad here. Then there's another ad right here. And you see what bugs me, that these ads actually look like valid articles. I mean, can you really tell instantly what is an ad? Yeah, of course. You might say there's this little thing that says ad, but you see, sometimes I think it is misleading, and these ads are actually good, really good. So for support here, probably not. But yeah, if you Google some more famous stocks like Hood, for example, or Apple, there's just too many ads in there for my taste. So this is why I don't like it. But Carlson, if it helps you, great. Okay, cool. So yeah, SJ says, when I was going through the scanner, most of them came up a no for me. I agree. Good. All right, what else? How do you define which stocks are value versus growth for the wheel? Let me actually see. I think there was another example today. What was the other example? Was it, maybe it is SRPT. No, gosh. Mastermind members, what did we talk about earlier? Not Hood. Can you quickly help me out here? What did we talk about earlier? Okay, I'll find it here in a moment. We'll get back to this, and I'll show you how I define growth. Gosh, it was a company. Oh, Lemonade. Okay, let me show you this. Now I know. Thanks, guys. Okay, so let's talk about Lemonade. Lemonade came up on the scanner. So here's the scanner, and we did have Lemonade coming up. And when you look at Lemonade, you might say, oh, you know what? That's actually not bad at all, because a strike price of 67 right here seems to be super solid support, right? But this is what I like to do. So you ask about growth versus value stock. So let's go to TradingView and LMND, Lemonade. And here's what TradingView does. TradingView gives us actually the income statement. Do you see this right here? So we have the income statement of Lemonade. And Lemonade is an online insurer. And what do you see? In 2017, they barely made any revenue, but a loss. Then they made more revenue and a larger loss. More revenue and a larger loss. A little bit more revenue and a larger loss. So what do you see here, right? I mean, this company is not profitable. It seems to buy customers at a loss, right? Because the revenue is slightly going up, yet the loss is widening. That's very typical for growth stocks. Let's see if actually SRPT, what was it? Support. Let me just type it. Jeez, oh Pete's. Support. Let's take a look at this. There we go. And let's take a look at their revenue figures. Okay, that seems to be a little bit more stable. It's a little bit concerning here is that we're actually declining. So that's not typically a value stock. Let's talk about a few value stocks. So for example, Walmart. Walmart is a value stock, right? I mean, that's clearly not a growth stock. Let's take a look at their income statement. And as you can see, super solid, nicely, slowly growing, and the profits are there as well. A little bit hard to see, but they're there as well. Apple is definitely not a growth stock anymore. Apple used to be a growth stock. Now it is definitely, look at this, right? I mean, you have a pretty stable revenue that is slightly going up, but not going crazy. Where could we see some crazy revenue? Probably Tesla, right? I mean, if you look at Tesla, it's actually not as crazy as I thought it would be. Maybe Peloton. Let's take a look at Peloton here. PTON is Peloton. And yeah, this is where you get an idea. You see, when you see a growth that is going almost parabolic, that's definitely growth stocks. So value stocks usually have more like this as in terms of revenue and also profits, while growth stocks are going like this, often at a loss. Not always, but often as a loss. Does this help? Okay, cool. Because that was a great question about value stocks versus growth stocks. All right, let's see. What else? So Oliver is asking, great question. When do you switch to Tradia with the wheel strategy? When I got rid of Ride, and here's why. I mean, Oliver, it's a great question. It's really just because I'm trading it here live on YouTube. What do you think would happen when I suddenly show an account where you don't see Ride in it anymore? Everybody would say, he's got to hide something. Yeah, he's no longer being honest. He's not talking about the right trade. So this is one of the challenges. Yes, I could transfer it over, but when you're transferring it over to another brokerage, it usually takes 2 weeks. I don't want to wait that long. This is really the main reason why I'm still with Tastyworks and not with Tradia, just because it's not easy. It's possible, but it's not easy to transfer this position. And I'm here and open and honest. I want to make sure that you know there's nothing to hide. Anyhow, good. So what else? This was the question from GP Peterson about value stocks versus growth stocks. Cool. And then we talked about Oliver's question here. Okay, so Max said, I'm considering starting a put selling strategy since I like it a lot. Does it make sense to sell a lot of the puts for a certain stock like Apple with all the cash? This is the question that comes up. See, this is where, Max, it's really up to you. So I like to use the wheel scanner, and I like to be in 5 different positions at any given time. Just noticed that I looked in the wrong camera. There we go. Still getting used to the 2 camera setup. There's one there, and then there's another one there. And there's the other camera. So whenever I accidentally switch to this camera and talk to this one, or look to the side, then you know why that is. Anyhow, okay. So the reason why I like this camera better, because it's closer to right there, where I have your comments. Okay, so Max, I like to be in 5 positions, not all doubling down on just one. Because if you are in one and then you get stuck there, that could be pretty bad, right? Okay, so cost basis includes short calls. Short calls when I'm selling calls? No, cost basis is just for the shares. The break even would include all the premium that I've received. But the cost basis is just for the shares. I'm not counting the premium that I've received. Yeah, exactly. So break even versus cost basis. Break even would be when I'm here deducting the premium that I have received, and cost basis is just for the stocks. And yep, Cheryl, right, has been a PITA, absolutely. Okay, so MH Asset Management says, if LVX came back on the wheel scanner, meeting your profit targets, would you treat it as separate wheel? Well, I would not enter it again as long as I have it. And right now it has been in a downtrend with no visible support for me. So it's very important that I see that there are some solid support levels. Making sense? Okay. So we shall see. Max asked, should I better sell different puts for different stocks? I would sell the same strike price, but yes, for different stocks. Okay. So we shall see. Space lot. Holding right stock is extremely dangerous. Well, aren't you glad that you don't have it, that only I'm holding it? That's right, would be different if you had it. So therefore, we shall be good. Okay, so do you see people complicating what is a simple strategy for the wheel? No, I just see people getting greedy. And I see people selling puts on stocks that they don't want to own. And you see this when they get assigned, and before they get assigned, they say, I'm about to get assigned and I'm panicking, I don't like this. And you see, I traded, let me just show you something. So last week I traded GDX. And what I did is I did sell the 3150 put. Okay, on Friday, GDX closed at 3150. Here is what I said to Mark, my head coach Mark Hodge, pretty much right before we closed. Geez, I hope GDX is going lower so that I can get assigned. You see, I was actually really bummed when I did not get assigned in GDX. And this with all of my positions, except right, but you already know this, with all of my positions, I want to make sure that I am getting assigned, that I can sell calls. I really want to own. If you look at my positions here again that I have right now in my portfolio, I'm absolutely fine holding the positions. I'm just trying to find my mouse here right now. I'm fine with the positions that I have. I would be very, very happy if I got assigned in CWH. I would be very, very happy if I got assigned in UAL. I am happy that I have JWN shares. I'm also quite happy that I have LVS shares because I've sold a lot of calls and collected a lot of premium against it. So the important thing here, and this is my point, because you ask, do people complicate it? No, but they trade it too aggressively, and then I see, I don't want to get assigned, I don't want to get assigned. That is completely wrong. Anyhow, good. So Cliff says CLF is like X, but at 22 and or so. Yeah, don't really like it. I don't see very strong support there. So we shall see. All right, cool. So good to see you here all live. Love it. When a stock drops, when should we apply the rescue mission? Take a look at the video. I'll link to it in the description. Rule of thumb, 30% down from your assigned price. 30% down. Okay, but I'll link to it. It's better explained in this video here. Brain says, do you see a major correction this month? Well, it's September. September and October, will it be a major? No. But I wouldn't be surprised if we are down 10%. I mean, we haven't had a correction of more than 5% in a year. So I really believe that we are overdue for a correction here, and it should be 10%. That would be healthy. That would be healthy. Okay. So we shall see. Okay. What would you do if you were assigned to 3 stocks when trading usually 5? Well, if I'm assigned in 3 stocks, then I would only trade 2 more, right? I would only sell puts on 2 more, and on the 3 stocks, I would sell calls. Does this help? Okay. Good. All right. So what's your take on options on Robinhood? Well, I just told you, Robinhood, I would stay away. There's a lot of controversy. They had to go public. I think it was rushed. If the SEC will ban payment for order flow, they might be in a world of pain here. So I would stay away from them. It's very, very, very much gambling here. Anyhow. Good. Hey, my gosh, we are already over time. It is so good to see you. It's so good to be live with you. If you enjoyed this show, I have a few more videos right now that should pop up here with more of the cool stuff that I do, explaining the strategies and also probably linking to the rescue mission one since you asked about this, and also probably about how to find support. So take a look at these videos, and then I will see you in the next Coffee with Marcus. Stay safe, stay healthy, and I'll see you very soon. Take care.